What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, I'd like to make your attention to the newsletter. If you're interested in receiving 5 to 10 swing trade ideas for this upcoming week, head on into the description of this video, click on the link, and enter your email address on the landing page there. You'll be added to the newsletter list, and I will send those out to you on Sunday afternoon. So again, that's 5 to 10 swing trade ideas or stocks I think will move this upcoming week. Without further ado, let's get into the weekly watch list where I do a technical analysis and give you some of my thoughts on the tickers here on the left. We have the broad market, SPY, the Qs, and IWM, and after that we do our companies, starting with Apple, all the way through the list down to Amazon. Let's get into it. Alrighty, so as always, starting off with our SPY weekly chart, you can see we now have two hammerish looking candles right in a row off of our 50 SMA and support zone down here at 281.22. This to me is a bullish sign. Two hammers stacking like that, it clearly shows that there are buyers sitting down here in these lower wicks. Prices should, and I say should, continue in the upwards direction unless this is just sort of some consolidation after this nasty slide down, and we are going to see more. Again, our uptrend is still intact. We have a higher set of lows here than our low here, so that is a-okay. As long as we sort of maintain this area, if we want to consider that a double bottom with our double hammers, that's a good thing, and we could always continue in the upwards direction. We'll zoom into the daily. So the daily provides a little bit more clarity, and you can see our hammer here still put in a lower or a higher low rather than our previous two lows. So I mean, if you wanted to get really picky, you could say that we are in, starting a new uptrend sort of thing like that. You can see our lows are continually getting higher, which is a good thing. So keep that in mind. We didn't get as low there. The next key level that I think we need to retest is obviously the backside of this trend line. If we can get up to through first this 290, then the back test. The 50 SMA, again, is going to be telling on which way we sort of go. This is key resistance up here. Again, I mentioned for the tone of the week, we would be watching if we could get above that 50 SMA. Again, we stayed below it, so we saw that bearish move down here. If we can get above it, which is going to be key, you can see we have resistance here, here, and here. So we'll draw on a resistance level there. Sort of eliminate this sort of triple top, and 50 SMA is much more favorable as of an area than this. If we can get back above this level here and the 50 SMA, I think it's easy sailing right back up to 301.17, sort of these highs in here. These really emotional sellers in these candles would really provide no resistance on the way back up. So look for 293.99, essentially 294 on the way back up in SPY. If we do see a bit of a downward move off of the retest of this trend line or this price level here, then we're looking at 281.22 again to retest our lows. Those are going to be key. If we give those up, the 200 SMA is going to come into play. Anything after that, we do need to hold on to 272.83. That is a key low from here and this little pullback here. So keep those in mind on the downside. Our upside is taken care of. Very similar situation here on the Qs. You can see, however, that our uptrend is still intact based on this trend line. Our lows are continually getting higher. Again, this hammer produced a nice bounce on Friday's session. Again, our key level of resistance is going to be right in this area around 188.61 and our 50 SMA. If we can get back above that, again, I think we take out these emotional sellers that were in these 2 days. Not very much in terms of structure in these two candles here. Keep in mind, again, I didn't cover this on SPY, but there's a small gap below us. Maybe that could fill on Monday, and then we see the reversal higher. Just, again, something to keep in mind there, the gap below us. Alrighty, moving on to IWM, you can see our chart is not quite the same as SPY and the Qs. It doesn't really follow the same exact shape. However, it's similar. The main difference to note here is what's happening with our resistance area, that key break area that we have been talking about. Instead of being so clearly defined, I think it's somewhere in here. You can see it's the close of that red hammer here. It's the resistance of this candle here, and we never quite got back up into it there. So I think the emotional sellers sort of get taken out with no resistance if we sort of get above this level, but it doesn't last long because you can see that there's tons and tons of data points to go off of right in here. It's not like we're just going to zoom back up to these highs. There are some key areas in this area of the chart that should be taken into consideration on the way back up if we get there. Of course, we do have to take out the granddaddy of all SMAs, the 200 SMA on the upside. That's this green line here. If we can get back above that, then I'd say this test here at 152.50 for round numbers sake should be possible. On the downside, sort of mapped out for us, we want to see these lows hold first. That would create sort of an inverted head and shoulder, shoulder 1, head, and then if those hold on any sort of back test, that would be shoulder 2, in which case you would buy the break of the neckline, so somewhere up here like we had talked about. However, if that gives, we're looking at our head to provide some support there at 145. If that gives, things could seemingly get pretty nasty as we don't really have much in terms of support below us here. I scrunched up the chart and it looks like we're really just going all the way back down to that spike low just before the beginning of 2019, which comes down to 126 on IWM. You might consider some of these areas, if you watch my mouse where these tails are, as support. We can draw on a level around that area just to give us a heads up. I would call it somewhere in this general vicinity there at 142. If that goes, then things could get real nasty as there's not much structure below. Starting our companies out, as always, is Apple, and I wanted to give you a zoomed out view so you could see a little context. We are in a bullish uptrend with this white dotted line being our key support. We have a start here and a touch here, and it could be in play. Depending on what sort of happens here, I just wanted to give you that overall context, let you know where this white dotted line was coming from. We do have a green candle here from Friday's close. That to me would indicate that we want to move higher and possibly retest a recent high up here at 211.87. We'll draw that one in. That is going to be a pretty key level if we can't break above that and get back into the uptrending channel. Then to me that would mean we're putting in a equal high, which then in turn would mean that we need to maintain the higher lows and then reattempt that higher high soon and potentially get back into the 215 area. On the downside, we are above the 50 SMA, so that needs to act as key support below us if it gives, as that moves up. If it gives, we do need to see 200 act as support, some of these lows in here. And then if that gives, then we really need to see this area in here hold, which is about between 195.25 and the low here is right around 193, we'll call it for round numbers sake. So if this area doesn't hold, that's why I'm saying we could see this trend line come into play. Again, it's all going to depend on if we can take out this high here and continue to put in higher highs, higher lows, maintain the uptrend. The Netflix chart has really left a little bit to be desired. This hammer, it gave us a gap up the next day, but after that it really never came to fruition. We never saw a retest of our recent highs or anything like that. Instead, we saw a lower high, and now we have a lower low. So we're in a bit of a downtrend here on Netflix. However, this is a hammer here on Thursday's session. We saw a little bit of follow through on Friday, and now we're going to wait and see what happens on Monday. We really need to get back above this level here at 305.75, just about, based on getting through some of these past support levels, which are now resistance. If we can get back above that, then we would obviously target 318.69. Anything higher than that is 330, based on where the gap started, and then 336.83 on the way after that. But that's quite a bit for 1 week. On the downside, things would look pretty nasty if we got down below the low of this candle here. If we broke down and got back below our support here at 296, we're looking at 287. Anything after that is 274.46. All right, looking at Tesla, you can see very similar to Netflix. We had the gap down, sort of never really got a meaningful gap fill. A couple of hammers in here really never led to much. And now we're sitting back down below our resistance here. We really need to see a move back above this 221 level, the low of this candle here, to reattempt the 50 SMA. If we get back above that, then I would say 246.62 could be a target. However, for now, I'm looking more downside biased, and it looks like this area in here, 207, could be well within reach for the chart there. A move down to there, if that gives, we're looking for our next support to come into play at 179.80. You can see there's not really much structure down here. So again, I feel like that if that gives, it could lead to some spontaneous selling right down into this level pretty quickly. Alrighty, Baba's ugly chart, as always, very gappy, very annoying to look at, not very smooth. You can see we have a nice uptrend that started. However, we are getting rejected pretty much right at our recent highs up here. This to me indicates, though, that we're just knocking on that door continually. And again, the more knocks on the door, the more likely we are to break it down when all this pressure is building beneath. If we see some consolidation between 178 and 172, that would be A-okay. We're just consolidating, again, right below the lows for that one last push to go through it and break through. Any sort of breakout above, and our next resistance, as you can see, is way up here at 195.59. So that would be a very meaningful breakout. We do need to clear some of these wicks, though, so just keep in mind the area between 178 and, 179, 180 just about. So if we can clear through that area, boom, I think the breakout happens all the way up to 195.59. If we don't get that, though, our supports and resistances are mapped out. We want to see these two moving averages that are sort of converging definitely hold up as support on the downside. If that gives, we got to sort of go through this chop and decipher where the supports and resistances are. 165 going to be key. Sort of if that area breaks, anything after that, you could consider any of these sort of sets of lows in here to act as support. So we have 159, this low sort of in here at 155, and then I would call this one 151.73. Facebook had a nice little panic sell right into a super support, as we would call it, where we have a horizontal price level as well as a rising support trend line sort of culminate. So this is very close to a super support. Nice little dead cat bounce forming here with some indecision on Friday. This to me would indicate that we could see a rollover again and a retest of this trend line and price level here at 179.18. If we see any sort of meaningful follow through to the upside, we want to first get through some of these wicks in here. I know it's kind of choppy area. Right around 185.96. If we can get back above that, then we could target our recent highs and 50 SMA. Those come into play around 190, 191-ish. So keep that area in mind on the chart as well. Anything to the downside, if that super support gives 174, based on some historic support and this area in here as well. And then our 50 SMA, or 200 SMA rather, this green line down here should certainly provide support as it has in the past here. NVDA, I'm leaving a little bit zoomed out. Maybe you see it, maybe you don't, but I'm going to point it out for you. If we look and draw something like this, we have a bit of a... So zooming in, you can see we had an indecisive candle again at the upper range of the resistance trend line, also culminating right at our 200 SMA, 50 SMA on the daily, and that to me would act as resistance. So I think it's more than likely we see sort of a pullback. We had earnings here, so gap up. Maybe we see some sort of a gap fill and move to the downside and sort of fade that gap a little bit and then retest this resistance trend line. After that, on the downside, if this gives though, and we see the gap fill and more, we sort of have a nice little area of resistance or support here that if it breaks, we're cleared to go lower to 142. So if this breaks here, 142, anything after that, sort of our support trend line that we pointed out earlier. Already, ROKU's chart's making pretty good sense right now. You can see we have our inverted hammer candle up here, which led to a little bit of a pullback, but now we have a dragonfly doji sort of counteracting that right at our support here based on the high of this candle. This to me indicates that ROKU sort of wants to go sideways and not really move in either direction too aggressively at this point. It sort of wants to consolidate and digest this big move to the upside. Consolidation between 128 and 142. I know that's a pretty big range, but just based on what we have here, that's kind of what we've got. You can see we have resistance coming into play based on these two candles. That's right around 134.56. So maybe just look for some movement in this range here. If we see anything breaking out of that, to the downside, we have 117.55, the low of this candle here, and then some of these highs in here should provide support on any sort of back test of that area. That's at 113.47. Then we have our 50 SMA, which is starting to curl up, which might provide some super support into this area if it gets down there. Microsoft sort of consolidating again. We are starting to put in those higher lows rather. You can see set of lows, and this low is still higher than that one, so that's a good signal. We want to see a break above that 50 SMA though. Again, if we can get above that, institutions tend to buy things above the 50 SMA. Boom, we do have a nice breakout level forming in this area, so 138.25. If we can get back above that, then boom, I think we shoot back up to our next one at 140.70. If we get rejected here, we want to see some of these areas act as support as they have in the tails of these candles. So I'd say 132 to somewhere in this range around 130.86, so the higher end of 130 should act as a support zone in this area. If we get back down into it, look for a nice little bounce. If that breaks though, you can see based on some of this emotional buying, I don't really think that there's much in terms of support here until we really get back down to 120.82. AMD chart is looking like a little bit much to digest here. You can see you got a big gap up, then a gap down, so kind of all over the place. I'd say, well, the gap to the downside has certainly been filled by this red candle here. You can see our touch to the high, and now it looks like we are trying to fill the gap to the upside. Our 50 SMA is sort of going to be a contender of resistance as well, so I'd say look for a sort of negative reaction to that gap fill, so fill the gap and then maybe get a pullback back down to 29, just about $30 here, this level. You can see that's sort of where some of our lows are around. If that gives, again, we're looking at 28.62. If we get the gap fill and it continues though, look for resistance at the back test of this trend line, and then some of our key price levels up here are highs, 34.26, 34.81, and 35.55 based on this wick way up here. McDonald's, again, getting a nice trend line touch, a nice little pullback. I wouldn't be surprised, again, to see it continue to just hover around this area, continue to put in new highs. You can see our new high there at 221.93. Going to offer a little bit of resistance on the way back up. However, I think, again, like I said, we see a retest of the trend line and a continuation upwards. Nice, real solid set of lows in here. That's going to act as a really strong support. I'm just going to move that trend line or that price level down a bit. I think this area on the chart is more meaningful than that one. So based on all these lows where the bounce sort of started from, I think we see a pullback into here. 214 that gives, 210.25 should certainly hold based on all the support we have here. If it gives, though, could get nasty and bring us back down to 206. But again, I think the trend is so strong in the upwards direction. We see some sideways action, another push up, some sideways action, another push up, continue and repeat. Last but not least, we have Amazon. You can see we have one of those indecision doji candles forming here. Again, slightly higher lows starting to form, so maybe a potential uptrend, but we do have a key breakout level here around, I'd call it from this area we have marked out already, 1825 to 1832. If we can get through this area and back into our trend line here, that would be a good thing. From there, you can see we have those emotional sellers. I think that would bring us all the way back up to 1875, potentially even retest the 50 SMA. Anything on the downside, we want to see these areas act as support, and we do have that 200 SMA sort of coinciding, sort of hiding there with that 1747 area. So that's certainly going to act as strong support on the way down. If that gives, though, you can see our low here is our next sort of target on the downside at 1673.22. That's going to wrap things up for this week's episode of the Weekly Watchlist. Again, if you're interested in joining the newsletter, first link in the description, enter your email address, and I'll get that out to you on Sunday afternoon. If you enjoyed the video, leave it a thumbs up. If you have any questions or comments, again, that's what the questions and comments section is for. And if you enjoyed the content, subscribe to the channel. There's certainly more of this on the way.